Good afternoon, everyone, and welcome to Stock Market Today. You have Ali Corm and Ed Carson here with a look at what went down in today's session and a couple of interesting growth stocks on the move, Ed.
Yeah, Paycom broke out, RH made a nice move, and Robinhood just kept on flying.
All right, well, we will cover all of that. But first, a look at the major indexes here today. We had the NASDAQ standing out in positive territory, up about 0.1% for the day. But elsewhere, we saw a slump. The Dow down 0.9%, the S&P down 0.5%, and the Russell 2000 down 1.1%. So are we starting to see more of this divergence again? And the NASDAQ is going to lead the charge higher from here, Ed?
I don't know. I mean, today, obviously, there was definitely growth did better because the real economy names got hit. Just economy concerns. There was a weak jobs report or from ADP. Crude oil fell sharply. Copper prices declined. So a lot of those sectors fell. The NASDAQ did better. But I will say the NASDAQ and Dow and S&P, they're all pretty close to highs. It's not like the NASDAQ is up there and the Dow is below its 50-day line. I don't, it's a little bit of a nudge one day. Exactly. It's not like February, April, May, those kind of months where things were just such huge divergences day to day, week to week. The Dow did go to its 21-day line, but that's fine. The Russell, that's a little bit more of a problem. It's hitting resistance at the 21-day, continue now. It's well below it's like 3% or so below the 50-day line. So that's not a good sign of market breadth. Obviously, a lot of energy stocks are in that sector. So that sector is not doing well.
And among standout growth stocks today, we have Paycom, ticker PAYC, gaining almost 11% for the day, gapping up strongly on a strong quarterly report. Some nice acceleration on both the top and bottom lines, earnings up 56%, revenue up 33% for the quarter. So yet another enterprise software stock that is looking pretty compelling.
Yeah, and I mean, one reason why the growth is finally rebounding, a lot of software names had a great 2020 because, you could do the work from home. It made life easier during the pandemic, but their bread and butter is providing basically human capital payroll type software to employers, and employers were cutting jobs. So their business slumped or at least struggled a little bit. So now they're seeing growth. So that's a positive sign. Really nice move. You can say there's a double bottom there. So getting above 404. So it was sort of a gap up in there. Or if you just want to see it as an early entry, however you want to look at it, it definitely was an actionable gap up. So that's just something to keep in mind is like there's a lot of software names. This is a little different than some of the others, but if you already have a lot, maybe you don't want to add another one. But this one definitely showed some really nice action. There's a lot of gap ups today.
Very good point there, Ed, about not wanting to get too concentrated in enterprise software. So how about something like RH, which gapped up on its last earnings report, but hasn't really made much upward progress since then, had a couple of fake outs here, but ultimately finding support where you wanted to see it at that 50-day line, getting a boost today up a little over 2%, backing off of its highs for the day, but arguably actionable as well.
Yeah, through that trend line that you're drawing, through the 50-day line, actionable there. I mean, part of the reason it struggled is that housing-related stocks had a tough time in June and July. So it gapped up and everything else was pulling back and it had trouble making more progress. But now we're seeing some housing stocks coming back up. Floor and Decor is broken out. Home Depot's near a buy point. And Floor and Decor, I think, has earnings soon. One day. And the ETF XHB, which has Floor and Decor, which has RH. It's a home builders ETF, but has plenty of non-home builders. That was our stock of the day yesterday. RH was our stock of the day today. So, that's just another way to play it. You can see there was some struggle. Now we're moving back up a little bit. After consolidation. So that's one reason why you could start looking at maybe RH again.
Okay, and circling back to RH here. Okay, we'll have to see how it fares if it can get above this short-term resistance within the handle. and continue moving higher. The next earnings report for RH is due in about a month's time. And Robinhood flew higher today, as you mentioned, Ed, closing the day up about 50%, but it intraday got above the 80 mark. So a really strong move out of the gate for this IPO that didn't have a great close on its first day of trade, but yesterday gaining 24%. And so today, 50%. Seems like the meme crowd has gotten a hold of this one, many of whom are probably trading on Robinhood.
Probably. And it's actually, this one has never really had a buy point. We like to see at least a short base, an IPO base. And this was like 2 days. That's not long enough. So we would not advocate. There was no time when that it really had a proper buy point. It may set up, and I think people should pay attention to it. But I think the real issue is that we seem to be transitioning. Now we seem to be seeing the meme. This was the most talked about stock on Reddit today, apparently. And if you can see a shift away to stocks like this one has been profitable in the past, it's supposed to be profitable next year. Growth is tremendous. So there's definitely a real story here. If you can have those meme social media investors moving into a stock that's actually has a story, a real story, rather than like AMC, which this is sort of like the business seems to be a dying business. I mean, maybe they can come up with something, but it's like it has not been explained to me very easily. But you can explain to me, hey, Robinhood, it quadrupled revenue in the last quarter. It's got a great future. It's like, certainly could be. That's plausible. I mean, so that would be, if you could see it, that would be good for growth investors, traditional growth investors that we, usually talk about, because if you can buy a stock correctly, buy it right. And then if the social media crowd wants to send it higher, maybe not 50% higher, but send it higher, that would be just a nice boost for growth investors.
Yeah. And not only will we have to see where Robinhood, the stock, goes from here, but like you said, what impacts this crowd could have on other stocks that we might be more interested in buying from here, both positive and maybe negative volatility as well. It's yet to be seen, but it's an interesting phenomenon that is happening. And you mentioned AMC here. We can see how wild this has been. The scaling doesn't even fit on the daily chart, but here you can see the weekly, some huge moves to the upside, but also some wild action as well. And this is why we talk about buying right. You don't want to just jump on the train of something that's already up 50%. You have to be very tactical with where you're getting in and manage your risk, and not just have those diamond hands no matter what, because that can really not be a good strategy for growing your account.
Diamonds are created by the most intense pressures on earth. I do not want my hands inflicted by the most intense pressure on earth. I do not think they would turn into diamonds. I can tell you on that.
All right, Ed, thank you so much for that analysis, and thank you all for tuning in. We're going to be back tomorrow morning on IBD Live, our daily morning live stream, where we hope you join us. It's very interactive. We're talking about actionable trade ideas in real time, portfolio management strategies, our take on the market, and so much more. Investors.com/IBD Live for all the details on that. We'll see you then, and we'll see you right back here tomorrow afternoon as well.